Visa, stock ticker V, is one of my absolute dividend growth stocks. Now, the starting dividend yield is actually below 1%, only sitting at 0.75%. So in this video, I want to help you understand why this is such an attractive dividend growth investment. And we're also going to be jumping into my stock valuation spreadsheet to see if we can find the intrinsic value of Visa. Now, keep in mind, I'm not a hypocrite. I actually do own Visa within my personal dividend portfolio. If I blow up this growth chart, you can see I'm currently up around 30% on my Visa position. So it has performed pretty well for me personally thus far. Now, from purely a historical perspective, if we look at the past decade, Visa has way outperformed the S&P 500 over the past decade, up around 467%, while the S&P 500 up around 218.5%. So again, way outperformed the market. So what are the reasons behind this? Well, before we even begin to dig into the dividend metrics, I want to look at some of the things in the financial statement. The first thing, we'll keep it real basic, look at the growing revenues over the past decade. Starting in September of 2013, you can see right here where they were, and look at this year-over-year revenue growth, jumping all the way forward to September 2022. That revenue has more than doubled, and it's also found its way all the way down to the bottom line. If we find net income, looks like it's right here. Again, net income has basically almost tripled over that time period as well, meaning their margins have been getting even better. And speaking of margins, if we come over here and look at profitability, look at the gross profit margin for Visa for the trailing 12 months. I don't think I know of any other business that has that high of gross profit margins. Now, since the company does have a low starting dividend yield, obviously I'm going to want to note this is a very safe dividend and that they also grow the dividend at a very high rate. So let's go ahead and jump into this dividend history. If we look at the past decade, we can see again, pretty clear track record of increasing dividends by a massive amount. In 2013, they were paying out around 8 cents per share every quarter, and jump forward to now, it's now sitting at 45 cents a share every single quarter. So again, rapid dividend growth. Let's go ahead and look at those dividend growth rates. If I scroll down, you can see the 3-year sitting at around 14.5%, 5-year dividend growth rate 17.2%, and the 10-year dividend growth rate sitting at over 19%. So that is absolutely phenomenal dividend growth. Obviously, that's exactly what you want to see if you invest into a company with a low starting dividend yield. Now, when you see a company that increases dividends by a high amount, something you want to check is the historical payout ratio over time. Ideally, you want to know that the payout ratio isn't increasing and eating up more of their free cash flow. So if we scroll down and look at this payout ratio over the past 5 years, you can see never at any point did it jump above 26%. So that means that the vast majority of their free cash flow is being able to be used to reinvest back into the business and do things like organic growth or buy back shares or mergers or acquisitions. So speaking of all of this, we want to see massive free cash flow growth from Visa. So if we jump to financials, go to the statement of cash flows, I'll scroll all the way down, and really the metric we want to be looking at is free cash flow per share, because that's going to take into account any share buybacks or if they're diluting shares. If we look right here, we can see their free cash flow per share in September of 2013 sitting at 98 cents. And look at the massive growth they've seen over the past decade. That's absolutely phenomenal. Again, that's pretty much exactly what I want to see as an investor. This is probably the most important metric that I could look for in a business. And like I mentioned earlier, there's a lot of things you can do with free cash flow. One of those things is obviously pay out growing dividends, but they're also providing value to their shareholders in the form of share buybacks. If you look right here, you can see they're continuing to issue share buybacks and repurchasing their common stock. So purely from a financial health position, I think this company looks like they are doing very well. So obviously the big question is, are they currently trading at a good value? Are they overvalued, undervalued? Well, to answer that question, we need to jump into my stock valuation spreadsheet and look at a few different valuation models. Like always, if you'd like to be able to download this spreadsheet, then you can head over to my Patreon page at the link in the description. But okay, let's go ahead and come up here and plug in stock ticker V and hit enter, and you can see all of this data will automatically load in. Now we're currently looking at a 500-day change chart, and obviously there has been a huge run up during 2023 for the share price for Visa, so it does make it a little bit harder to find a good entry point, but let's go ahead and dig into it and see if we can find the intrinsic value. Current dividend payout sitting at around $1.80, giving it a yield of 0.75%, and like we already saw, nice low payout ratio, currently sitting at around 22%. Now analysts currently have a target price of around $277.61, and institutional ownership extremely high, almost at 99%. To me, that shows a lot of confidence in this stock, and I do tend to agree. Now the beta is sitting at around 0.97, so very close to 1, so the volatility should be pretty close to that of the market. Now the first valuation model that we're going to be looking at is Graham's valuation, and this is a valuation model invented by Benjamin Graham to calculate intrinsic value, and here's the formula he lays out for us. So the first thing we need is our earnings per share projection, which you can see right here. I'm staying in line with analyst projections. I'm also staying in line with projections for their growth rate, which does tend to be pretty high when you compare it to a lot of other stocks that have existed for as long as Visa. We then multiply that by 4.4, which is the average yield of AAA corporate bonds, divide by Y, which is the current yield on AAA corporate bonds, and it's currently sitting very high at 4.8. And keep in mind, that's due to current market conditions, and that will drive down the current valuation, because you can see we come to an intrinsic value of $189.57. Now, 2 or 3 years ago, the current yield on AAA corporate bonds was sitting a lot closer to around 3 or even 3.5. So at 3.5, you can see this valuation would jump up quite a bit. So definitely current market conditions driving down this valuation model quite a bit. Now, typically I like to look at a historical price to tangible book value for financial stocks, but I really don't think it's a fair valuation in Visa scenarios. So we're going to keep moving forward and look at our multiples valuation. Now, the idea behind the multiples valuation is we should be able to value Visa based on how the market is valuing companies that are similar in structure. So you can see our comparable companies. We're taking their stock price, dividing by the earnings per share to get their price to earnings multiple. We take the average or the median, whichever one makes more sense. We multiply it by Visa's earnings per share, and we come to an intrinsic value of $287.94. Now, sometimes I do think PayPal is a good example for a comparable for Visa, but I think with their current situation, it doesn't make sense to use them in this scenario. Now, the last valuation model we'll be looking at is the dividend discount model. And this values a company based on how much they pay out in dividends and how much that dividend is increasing year over year. Now, obviously, they're not paying out a lot in dividends at this very moment, but the dividend growth rates are very high. You can see the year over year dividend payouts and the year over year dividend growth rates. We have 20%, 7%, 17.19, and 20% again. So again, rapid dividend growth just like we saw earlier. That's an average growth rate of around 16% during this time period. So moving forward, I'm projecting a dividend growth rate of 7.75%, discount rate of 8.5, and that gives us a dividend discount model price per share of $258.60. So when we jump over to our output tab, we can see the 3 valuations that we actually use in this scenario. I'll zoom out just a little bit, but we came to Graham's 189.57, multiples at 288, and dividend discount model at 258.60. That gives us an intrinsic value of $245.50. Now, the current trading price is sitting at around $241.14, so there's not much of a difference as of right now. With a 10% margin of safety, the acceptable buy price for this company is $220.95, but with a 20% margin of safety, our acceptable buy price sitting at around $196.40. Now, with current market conditions, we're definitely in a scenario where there's a lot of companies trading at a much higher valuation than they were a year ago. I remember when I originally bought into this company, they were probably trading at around $180 to $185 per share. So again, obviously, like I already pointed out earlier in the video, I've seen pretty nice returns, but this does kind of make me go back to what Warren Buffett has talked about in the past. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Me personally, I love finding companies I believe in long term that are currently undervalued, but with current market conditions, that has become a lot harder. So Visa is probably one of the areas where I can feel confident 5 to 10 years from now, all of their underlying metrics will be higher, which will lead to share price appreciation over longer time periods. Obviously, short term, I have no idea what will happen to this share price, but I definitely think Visa is an example of a wonderful business that will be able to continue to grow its free cash flow year over year. So that being said, I do think Visa is trading at a higher valuation right now, but I actually did add just a couple of shares the other day because, again, going back to that Warren Buffett quote, I think Visa is what I would consider a wonderful business that will be around for a long time. But go ahead and let me know what you think of this company in the comments down below if you plan on buying or selling. If you'd like to be able to download this spreadsheet and join a community of dividend investors, then you can head over to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.